It's June 2nd, and this is the video log. It takes 30,000 to a million. After I show you the account, I will talk about how you can shop for IV. IV meaning implied volatility. If you are an option selling enthusiast, then you'll probably get a little excited at this, and you'll see that mouth-watering theta premium ready to be melted right in front of your face. And I'll show you how you can browse for that and how you can get some ideas. But first, the account. Hold on, it's not ready. Pause. All right. And it's ready. Sitting at almost 183, which is a massive gain since yesterday, especially relative to the market, beating the S&P 500. I think even the NASDAQ. You guys really like the week, month, 3-month, year, and all charts, so I'm going to go through them. This is the week gain. It's 6%. 1 month sitting at 0.88. 3 months, 6.2. 1 year, 15.84, beating the crap out of the market. In fact, actually, let me go to this tab since you guys like this one. I started investing somewhere August 28, 2018 with this account. And since then, it's seen some action, sitting at 153.19 at the moment. Percentage gain. Well, let's go to that year chart, and I'll show you something I'm doing that I'm really happy about. 15.83% gain in the year chart. Let's go to the watch list. Look at the SPY. 1 year chart, minus 0.58. So if you were invested in the 500, if I was invested in the S&P 500, I would be down 0.5% on the year chart. Actually lost money over a 1 year period. But if I was doing what I'm doing, I'd be up 25 grand. Almost 16%. This is the kind of moments that makes me reflect in a positive way and think, man, I'm glad I'm doing this, right? Because if I'm doing better than the index benchmark, then I'm happy. All right, so that's good. I'm doing well. Now, I'm going to go through all of the positions real quick so you can find out what it is. And this little box contains all the option information that you might need. So just scroll. I'm going to scroll through it real quick. You can pause the video player at any moment to try to find out the exact position. So this is it. You can see a lot of Chinese leap options that actually are less in number than they were yesterday because I sold some Chinese stuff. Okay, I was waiting for a little bit of pop to reduce my position. Yeah, I know I'm kind of going back on my bets, but look, I'm still pretty exposed. I've now got rid of probably more than half of my Chinese position, maybe even probably around there. But I still got plenty of exposure, so if China does explode, I'll be able to participate in that. I mean, I still got like there's some Vipshops leaps that are really not likely to hit, but I got Alibaba 140 calls, 3 of them that expire in 2024, so that could pay off. I got 110 leap call option that expires in 2024. And there's another, way out of the money Hail Mary that expires at 235. So I've still got plenty of exposure, and I still have 200 shares of JD and another 1,400 Vipshop. So I still got some exposure. It's not like I'm leaving the area, I'm leaving the sector. I just wanted to raise cash, and I wanted to reduce my Chinese exposure for a few reasons. Mainly, it's the quality of information that I'm getting from there is questionable. And not so much that, like the reporting, I trust the companies themselves, right? I trust that Alibaba is going to give me good numbers. I trust that JD is going to be on top of it. They're not going to give me faulty numbers. But what I don't trust is like the rhetoric, what's being said by officials, by regulators, by Chinese leadership, and they're starting to contradict themselves. Well, they have been for a while, but it's more intensified now. So there's if I'm not getting a clear message from that country, I don't know how things are going to go. And not only are the messages mixed from the regulators and their leadership in China, but they're also mixed from the US about the Chinese issue as well. So Chinese regulators saying one thing, American regulators saying the exact opposite thing. So I really have no idea like who to trust, and I can't make a decision. But I'm definitely making a bet on it just in case things work out for the better. There's so much value there, and I do want to participate into it. I don't want to miss this out, right? So I'm not trying to be sell too early, Slavi, but Stes, new nickname. So but I do want to be a little bit on the safe side. I want to lock in some of these gains. Actually, I sold some of the positions at a loss. But anyway, enough about that. The investing tab, I'm looking at only 13.96% leverage because, as I said, I've sold some positions. What else did I do? What else did I sell? Yeah, I just sold Chinese positions, I think, today. So to take a look at the total equity now, I have Apple sitting firmly at number one, no challenger. Main Street Capital made its way into second place with 26,400 ish. Realty income at 22,000. By the way, you can see how much green there is on the board now, as compared to even just yesterday or the day before. Things change quickly in this market, but mostly because these positions are not held for very long, except for Main Street Capital, which is riding around, average entry price. But all these positions that I've been in and out, I'm trading, especially the ones down here. So they're not going to be up that much. They're not going to be down that much. The main positions are these top three actually, which just happen to comprise the largest portion of the account right now. So apparently I'm shifting to the safe side right now because I'm kind of betting that this is a bear market rally. I talked about the bear market rally in previous episodes, but basically I kind of anticipated this a little bit. You can hear me talk about it a couple episodes ago, that I think there's going to be some legs up, and I predicted maybe another 2 to 5%. I'm sorry, 5 to 10% up. We've already had 3 or so percent up, so maybe another couple percent, maybe another 8%. But I'm expecting this rally to fizzle out and negative news to kind of start overwhelming the narrative again, and money flow start going the other way. I expect people to lock in some gains, just like I am. I'm just trying to do it before everybody else. I expect people to raise even more cash on this upturn. So I think the bear market will resume eventually. I don't know if it's going to be tomorrow or in a couple of months, but I don't think we're going to get a new high on this particular rally. So that's my opinion anyway. I'm positioning kind of for it. I'm freeing up some of the margins so I can enter big again once the market starts going down again. I may even play the downside if it comes to it, but I've never really done well playing the bear side of things, so I'll probably skip it. Anyway, implied volatility. So in order to get some ideas, in order to sell some puts or calls or spreads. For ideas, what you can do is you can just kind of search. You can Google or search or whatever all of the highest IV stocks out there. So you can just go highest volatility. So we can go to a website like this, like ivolatility.com, for example. And what we're looking for here is not like, this doesn't mean much. Okay, all these numbers on the right doesn't mean much. What you're looking for is actually just the names. Or at least what I'm looking for, right? It's just the names. Now, most of these names are going to be very volatile for a reason, but like Bed Bath & Beyond or Sundial Growers or Mullen Automotive or AMC, right? Lyft. So they're going to be very volatile. But the implied volatility is also very high. And usually that's all that is for a reason. And what's that reason is, well, sometimes there's things like earnings that same week, on the Friday or the day after or whatever. So naturally there's going to be a lot of unpredictable action, well, somewhat predictable action to some, I guess, that's going to happen very, very soon. And so that kind of juices up the implied volatility for that option date. So make sure you know what's going on. Like when you find a symbol, for example, was looking at Lululemon. And when you find a symbol, for me personally, I would have to do a lot of homework on the underlying asset, right? And I can't make a decision that quickly. I'd probably need a few days or a week in order to try to figure out, okay, is this a company that I want to put some money behind, a company that I could use as collateral later on, or, what have you. But it looks like actually it's fairly stable, and it tracks the market more or less, and it hasn't had that big of a drop relative to all of the high-tech, non-money making stocks of late. So this is not fundamental analysis. Obviously, you got to do your own due diligence. I'm just doing a quick look at the numbers here just to kind of get an idea of the company before I even look at the premiums. And so what you're gonna do here is you're gonna go to trade options, and these premiums are pretty ludicrous. Just to put some in perspective, okay? Now, let's go to Goldman Sachs, which is what I like to sell against, right? Goldman Sachs, if I go to the same date, June 10th, always click the date first. Let's say I want to sell some puts. So these two stocks are about the same price, right? So stock's about 125. If I want to sell 15 puts, then I'd be getting $256. But if I go to Lululemon, good old Lulu. Well, not G Lulu, although that would be a mad cool brand, that's for sure. So if I go to Lululemon, roughly the same price, right? If I go to sell put, always do the date first. I broke my rule. Look at these juicy premiums. So let's go $10. What was that? $15 below? Something like this. $2.90. $15 below, right? Yeah, look at this. So I'd get $1,100 instead of $250 for selling a put option on Lululemon. Now, their earnings are tomorrow. Okay, so there's this thing could drop by $50 or more. So that's all being priced in, right? That's all being priced into these options. So you have to be careful when you're selling these, all right? Like, don't just jump into any company, especially a company like AMC or something where things are not that certain. But actually, Lululemon, this might be interesting. The reason I say this is because this is a money-making company, I think, yeah. So they're making money. Look, this is actual earnings versus estimated earnings. They're actually making money, and it's not bad. I mean, $2.50 for a $300 stock, okay. It's not awesome, maybe like 4 or 5% cash flow or something like that. But at least it's making money. Maybe it's not deserving of its $300 price tag, but this could be a decent collateral. But you may lose 200%. I'm sorry, it may go down like $200 from here. I think if this company was $100 based on just these earnings, that'd be all right, or even $150. So you got to do your research. You can't, if you're doing what I'm doing, what you can do if you want to do a little bit more of a gamble is you could, first fix the date. You could sell a put, right? Collect some harvest some theta here. Let's say you go down to 290. And then what you can do is you can buy one, right, to make it a spread a little bit further down. So how about 280? Okay, so I would get 275. And the cool part about this is that you would actually See, it says it right here. Robinhood is very smart, so it tells me that I've done a put credit spread. I would only need, look at this, I would only need $1,000 collateral. So basically I'm betting that the stock is not gonna drop, just sail through the one by the 280 level and keep going down, right? So that's kind of what I'm betting on. And it could happen, but this almost a third of the collateral. I mean, it's huge, 33%. That's like, 27.5% gain in one day. It's really juicy. I might do this. No, I won't. But they do report after market close. So this premium is probably going to stay fat until the very end of the day. So if you want to do that tomorrow/today, when you're watching this video, if the market's still open, you can do something like this. Or you can do it the other way if you think it's going bad, right? You can go, you can sell a call. Yeah. Let's say you don't think it's going to go past 330. Sell in here, and then you can buy a call. Let's say at 340. And then look at this. Oh, you're going to get almost 50% in return if it doesn't go up. Well, this is actually kind of crazy. I guess you have to enter limit price, so you might not get this exact. Let's see. 4.95. Alright. Oh, sorry. Combine it with the other one. I didn't cancel the put credit spread. So if you do this on the top side, then you're actually getting a call spread, which is probably worth about just as much, maybe 220. It's worth 220, and then the put spread is worth, I don't know how much, 275. And you can get an iron condor, a short iron condor. That means I'm more biased on the short side. And you could get it for $1,000 collateral. You could be collecting $500. It's not bad. But if one of the wings blows off, then at least you get the premium from the other wing. So an iron condor might not actually even be that bad of an idea if you think the price is not going to move much. You could just get $500 like that, 50% return on your money in one day. But there's a lot of things you can do. The point is, you can definitely harvest some theta there. All right, now that is my IV discussion. Hopefully you all got some ideas about how to look for some fat volatility out there. But look, if you're me, I don't want to do this because I don't know the company well enough. I'd have to look at it, study it, I have to watch it move. So personally for me, I'm not ready for this. Okay, so I'll probably lose the $1,000 collateral or at least part of it, right? So don't, if you're a risk taker, then go for it, but make sure that you know of the risks involved, which is you could lose potentially $1,000 from this one trade. So keep that in mind. If you like a company that usually has a high implied volatility and but with a relatively stable price, let me know because I like harvesting those, right? EBIX is one of those companies, so that's why I made a bunch of money on EBIX, which is partly why I'm beating the market, I guess. But it's one of the reasons because I've been collecting a lot of premium from companies like that. So if you know some companies that you like selling options against, let me know so I can take a look at them. Maybe I can get some ideas and we can both make money, right? It's possible for us to both make money, or all of us. All right. Okay, I'm going to leave it at that. Hopefully I'll make another video tomorrow, and hopefully it's a green day. Peace.